Good morning. Good morning, everyone. Welcome. A very important day. It's our first podcast, and we have a very, very special guest to our podcast called Maddern Financial Money Talk. We have Lisa Morgan, an equity player in Maddern Financial, and we're going to get a much better understanding of her and the role that she plays within the firm. Lisa, accountants have been known over the decades in their own mind that they are the so-called trusted advisor. I personally think that's nonsense. All right, I think that's old school thinking. I think that's been superseded now, and probably the advisor is in fact the new key trusted advisor. How do you feel about that?
I would probably say we're equal weighting there on that one. I think the accountant is still very much a trusted advisor, as is a financial advisor. With an accountant, the focus, people are very conscious of their money and their wealth and wanting to grow it, paying less tax, etc., till the day they die. I mean, that's always first and foremost in their mind. Alongside of that, and in conjunction, is strong financial advice. So the trusted advisor is really important as well. But I think there is a strong role for the accountant. And I think trusted advisor is still, very much something that people go to.
Okay. So in a sense, what you're saying is, because the understanding really is that accountants essentially start with complexity and the old adage of a shoebox of receipts. So they start with a shoebox of receipts, or look, my affairs are in disarray. I haven't done tax returns for the past 2 or 3 years. I've just created a self-managed super fund. I'm not sure how to do a return for that, etc. So they come to you with this, I wouldn't call it a mess, but certainly this complexity. Your job is to convert that to a nice, tailored, compliant return where sign here and you won't be in harm's way with the Australian Tax Office. Advisors, on the other hand, are very, very different people. We are wealth creators. We're expansionists. Somebody comes and says, look, I want my children to go to private schools. And the question is, well, should they go from primary school or secondary school? So how should we save for that? How much money would I like to have in retirement? And again, when does that occur? So it's the wealth creation phase. So is it not true then that advice is really expansive and accounting by nature is contraction? Would you agree with that?
Yes.
And would you like to comment on that?
Yes, I do.
Oh, you do? Comment. Oh, comment away then.
I do
Okay.
agree with that one.
Yeah.
But look, for an accountant, you've got to do a tax return. It's just, mandatory.
But that's compliance, isn't it? That's compliance. So yes. Protestant, Catholic, male or female, you have to do a tax return.
Correct. But sometimes a client may not be thinking about financial advice when in fact they need it.
Right.
And I think most people need it,
right.
But they're just caught up in, I've got to do my tax return, the deadline is X, just get that done, and that's all I want to focus on. But definitely financial advice is what everybody needs.
Right. Okay, and how do you see the two working together? So arguably, and what this firm has tried to do is to put them both together, because if you have an advisor in Malvern, like we are, and an accountant in Carlton, chances are the accountant in Carlton may have a strategic relationship with another advisor from another arrangement, and I already own an accounting firm. So therefore, I'm going to use my firm. So if a client says, well, look, I'm happy to have Maddern Financial in Malvern for my advice, but I'm going to stay with Smith & Associates in Carlton, arguably there is a loss factor. There is a disconnect, because I'm not necessarily going to spend a lot of time with that Carlton accountant. And that Carlton accountant, if they've already got a strategic relationship, is not going to spend a lot of time with me. So at the end of the day, the client really loses, because there's no synthesis, there's no total immersion, there's no full integration. So if a client comes to this firm, they have in the one room, they have their tax agent, they have their banker, namely a mortgage person perhaps, and then they have their investment person all in the same room. The investment side of our business might be yabbering on about, oh, look, Australia should feed Asia, Wagyu beef, Capilano, honey, bigger cheese, Atlantic salmon, abalone from the Margaret River, and I want you to buy some of those shares. The accountant immediately is in earshot of this and can say, that's all good and very well, but don't put it in your name. Don't put it in the couple's name. I'd like to see that in a family trust or for tax reasons, or I'd like to see that in a self-managed super fund. And it's not just the initial work leading to the statement of advice. It's the ongoing reviews of once or twice a year when the client comes in. So is that fair to say that it's these two are totally compatible, accounting and advice? They should be in the one firm, not separated, and a client's best interests are served by working with a firm where accounting and advice are in the one firm, so that when they come in, there's a total integration and a total connection between the two areas. Is that fair? Would you like to comment on that and some of your experiences?
Yeah, I think that is very fair. It is totally 100% a connection there. And you're going to do yourself a disfavour and a massive disadvantage if you don't have an accountant and the financial advice in the one room, which is what we do here. And apart from what you've gone and said, there's so many other benefits. So with clients here, and I'll talk about clients who come in here, our current clients that are coming in for a review on financial advice, the accountants actually do a huge amount of background work before that meeting. So we will go into the ATO portal, look at income year to date, because financial advice is what's happening today and where you want to go moving forward. We will have tax returns, so we know if there's any capital losses to be carried forward in case the advice is to trigger a capital gain or a sell down or a transfer into another tax-effective entity, whether that's a trust or a super fund or something along that line. We have a look at superannuation caps, members' balances, etc. What we can see, touch, feel, view, research before that meeting. Now, if you don't have your accountant and your advisor in the same room, which is what we have here, you're going to miss out on it a lot.
Now, one of the other aspects of Maddern Financial is that we are 100% independent. No commissions, no kickbacks, no sweetheart deals. It's Section 923A of the Corporations Act. So no commissions on insurances and so forth. So we don't have to take a client down a garden path. If a client says, look, I want nothing to do with shares, I want 10 properties before I'm 60, the real key question for them is not 10 properties before 60. It really is, how should I buy those properties? You know, should I buy them in my name? Should I buy them in my wife's name? Should I buy them in the lovey-dovey joint name? Should I buy them in a family trust? Should I buy them in a self-managed super fund? And that's probably the key question, isn't it? So it's probably the case that the accounting stabilisation and identification of key tax structures should probably come before the advice then follows, because we've got to get it into the right tax structure. Because if you buy 10 properties in your personal name, you're going to meet a very good friend one day called capital gains tax. And so there might be some ways to legally and appropriately minimise that. So again, it's a key question of not what you buy, because again, even if you look at the issue of property, there's factory, office, warehouse and residential. There's a series of choices and each of them have got different features. But the most important decision is probably how you buy it. And the same thing applies to shares, gold bullion, blocks of land in Torquay, managed funds, whatever. Any asset class is probably how you buy it. Would that be a fair comment? Yep.
Yeah, very fair. And that's a sort of a huge talking point. You've got to get that all sorted up front. And And it is a lifetime. It's a lifetime plan. It's not just for the next 1 or 2 years. So get that sorted up front and go from there. I think that's really important.
And how do things like estate planning, because a definition of financial advice has often been we need to help the client create wealth so that they can live a good retirement, fund the children to appropriate schools, help them get deposit for a house if appropriate at some point in their life, then protect the wealth of that client through, again, insurances and protective structures and things like that. And finally, wealth succession. Getting it to loved ones in the fullness of time. So do you assist with that? Do you do wills, enduring powers of attorney, testamentary trusts? Do you do all of these sorts of things? And is superannuation, can I just pop super in my will, or does it require a different treatment, like a binding death benefit nomination? Could you talk a little bit about that?
Yeah, so we can sort all of that out for the client. We can arrange powers of attorney to be done, wills to be done, self-managed super fund, binding death benefit nominations. We can have a look at your estate planning, and that's really important because if you've got a large amount of assets in a person who has either got ill health and or is aging, then that is definitely going to trigger some sort of CGT event on death. So we can have a look at all of that, simplify it, make it easier for the client.
All right, look, you seem to have a lot of knowledge. Can you just tell the audience out there what's your experience and what your qualifications are? So did you go to a TAFE course to become an accountant? I mean, what did you do, Lisa?
All right. I started off actually with an economics degree. So accounting wasn't offered at the school that I went to. But I liked numbers. So I went down the economics route, but economics was not really a passion of mine, but I did really enjoy numbers and doing all of that sort of work. So I became an accountant. I started off in state revenue when I was really quite young. Didn't really know where I wanted to go. So I had a stint in government, but that wasn't for me, didn't suit me. So I wasn't there for very long and then opted out and went into public practice, into chartered accounting firms, and have been in there since.
Okay. And so your formal qualifications, you've got a Bachelor of Economics, and then you decided that you'd suddenly become an accountant. Was there any courses you had to complete, or did you just wave a magic wand, set up a little shingle saying, I am an accountant? I mean, Lisa, what did you have to do?
Yeah, no, you can't get it that easily. When I started off in a chartered accounting firm, I did something called the professional year, and that's to become a chartered accountant. That's quite a difficult course to pass, and I got that one. So that's how I became a chartered accountant from there. And then from there, I automatically got my CPA. I didn't have to do that one because I had the chartered, which is considered to be a course where you are allowed to carry that CPA qualification with you. And then I've done a lot of self-managed super fund courses from there and just a lot of CPD points after that.
All right. Now, you're also not just a chartered accountant. You're what's called an FCA. So what's an FCA, Lisa?
So it's a fellow chartered accountant.
All right. So the Society of Chartered Accountants have honoured you as a fellow. So you're above really a chartered accountant and you're a CPA. Now, recently in the last month or so, you've completed another set of exams, very strenuous and tough exams relating to self-managed super funds. Now, these are conducted by the Self-Managed Super Fund Association. Can you just tell our listeners exactly what is this qualification that you've received now?
Yeah, so it's the Self-Managed Super Funds, the Specialist Advisor qualification. There's actually not too many in Australia that have this qualification. So I'm able to advise on self-managed super funds. And yeah, it's just an extra course. That was also quite tough to pass that one.
And so that's a specialist SMS advisor, and it's administered and controlled and examined by the peak body for self-managed super funds in Australia, the Self-Managed Super Fund Association, SMSF Association. Used to be known as SPA, SPAA, now the SMSF Association. So
it's not too many of them, but I believe you're one.
Oh, yeah. Well, Lisa, I thank you very much. I have a few qualifications, and so I'm comfortable with who I am. Thank you. Okay, look, that's excellent. I just want to touch a little bit now about the idea of tax planning. We as a firm have never bought a fee. So a lot of clients grow by acquisition where they have to pay fees. Now, if you buy accounting fees, it's often $1.20 on a dollar. If you buy financial planning fees, it tends to be, again, either a multiple of EBIT or 3 times recurring income. We've not bought a cracker in our 20-something years of running a business. So how have all of these firms, how are all these people have made the decision, I am leaving my accountant that I've been with for 10 or 15 or 20 years, or 2 years or 1 year or whatever, and decided to come across to Maddern Accountants? I mean, how have they done that? Has it been because they've been disappointed that there's been no proactive tax planning? And again, it's so easy for accountants with the cash cow that BAS statements are, because money rolls in like the Mississippi River on a regular basis when you're doing BAS statements. You have to do BAS statements as well, but you also find the time, which has been a real boon for many new clients with respect to tax planning. Do you want to talk about compliance, tax planning, and all of those sorts of things, and the difference between both, and why, and what is the difference between an average accountant and arguably a really good accountant?
All right, so I'll start off with that one first. With an accountant, an accountant-only firm, and most are accounting-only firms, they're going to do your tax return. The client's going to come in, they want their annual tax return done, the accountant completes it, and then see you later, we'll see next year. If it's a business, then you do quarterly BASs or monthly IASs or something along that line. But they're so busy that's where their services start and that's where they finish. We offer so many additional services here, and it's easy for us to get a client over onto the advice side, or from the advice side over to the accounting firm, because it's all here in the one office and we can service all of that. So our array of services is exceptional. I think that there's very few that offer this sort of service.
What is the one thing that clients say when they come that they never got at the previous accountant, albeit that they were lovely people, albeit that they did really good BAS statements, albeit that they did really good tax returns? Because really that's what's called compliance accounting, and it's absolutely bread and butter. It's necessary. It's TAFE 101. You need to do it. But many accounting firms are now getting that done in India, they're getting that done in Sri Lanka, and they're getting that done in the Philippines to reduce the overall cost. But it's necessary because the ATO wants you to do a tax return, okay? Again, on a family trust, a self-managed super fund, individuals, etc., proprietary limiteds, whatever it may be. But they've often missed, the accountants that they've had have not done something that we do now as a matter of course, and it's been welcomed unbelievably by many of our clients. And what would that be, Lisa? Tax planning. Tell everybody a little bit more about tax planning.
So we constantly tax plan it virtually every time you pick up a client, pick up a file. We're just trained, and it's almost like a knee-jerk, an automatic response to have a look at what the client has, have a look at where the client's going, their wealth creation, which is easy to do because we just see the files on the financial advice side, and we can make recommendations during the year, and that constantly happens, constantly. We do that all the time.
All right. So at a minimum, to use a football game analogy, at 3/4 time, which in a financial year ending at 30 June, is roughly the April or May period, you will bring clients in and say, essentially, in the last 3 months of the financial year, what can we do? Can we prepay interest in advance on an investment property? Can we pay our income protection in advance? Can we get some more franking credits? Whatever it may be, you work on that, because when you're just doing compliance accounting, it's like, well, we've noted that, but they've not done anything about it or improving it or expanding it or helping the client actually reduce their tax. I can remember my tax years ago being done by a former managing partner of Price Waterhouse, and he said, "Oh, Dennis," he said, you've had an absolutely bonza year. He said, you've made a small fortune here." And I said, "Oh, Neville, look, thanks very much for that." So forth. He says, "But there's some bad news." And I said, "What's that?" And he said, "Oh, you're going to pay a very, very high tax." And I said, "But what can we do about that?" And he said, "Well, the financial year's over." And I said, "But why didn't you see me before the end of the financial year?" So the financial year ends at 30 June, and he'd keep having appointments with me to do the tax in September. Well, the siren's blown. Everyone's gone home and showered. The game's over. And so they just don't do it. Accountants simply just don't do it. Now, I don't know why, but they don't bring people in that April-May time frame to say, now look, it appears from 3/4 of the year you're going to have a bumper of a year. What can we do to help you minimise tax in this last quarter? And so forth. And again, it can be superannuation contributions. It can be 101 different things. So it's fair to say that is one of the areas that you excel in and is a centre of excellence for your firm, your accounting firm.
Yeah, absolutely. Yeah. And that's exactly what we do. And you can tax plan for a client, and it can be constantly, during the year as well. So, and we time. So, for example, if we saw a new client and we saw them specifically for tax planning, and it was sort of April, May, or June, we might then just time a capital gains tax event or anything else, which is all part of our tax planning over a series of years. So we have a look at all of that.
Okay. Let's say some of our listeners out there say, okay, well, look, I wouldn't mind a no obligation conversation with Lisa Morgan. So how would they go about it? I mean, how would they make contact with you and perhaps share some of their affairs? Are you covered by the Privacy Act? I mean, if they gave you some documents, are you covered by... Again, the Privacy Act, is the firm encrypted with its technology? Do we have cybersecurity cover? How do we protect client files? And what sort of fee or no fee, or how would somebody go about making contact if they were interested in having a no obligation conversation with you?
I think the first thing is to call the office, and the number's 9999 7200. We can go from.
Is that a Sydney number?
Melbourne number.
Melbourne number. Oh, very good, very good. Okay, 039999 7200. Okay.
Yes, but we've got clients all over Australia, internationally as well. So.
Right, so you can do Zooms, Teams, Google Meets. You can do phone calls. You can do face-to-faces. All of those things.
Absolutely, and the world is quite small now. We've got clients in the US and the UK, and the time difference is polar opposite to here. But we managed to find some time during the day where it connects up with everyone, and we just go from there. It's very simple. It's all very safe, all very secure, and I would probably just take a brief of what the client wants, a little bit of background data on the client, and go from there.
All right. And if they decided to make the move, I mean, what is the etiquette with the previous accountant? Do you ignore them? Are they resistant to lose the client? Probably would be. I mean, what's the procedure, the protocol, the etiquette to have somebody come to you and leave their current account?
It's a fairly simple process. We do what's called an ethical letter, and we send that off to the accountant and then take it from there. And it's probably always, I consider, best practice if we do the most recent tax return, the one that has just passed, because then we've got a gut feel for the client, and that helps when we go further and do tax planning.
All right. So if it's halfway through the year, and we're virtually halfway through the year now, so if a client wanted to contact you in the month of October, November we're currently in financial year 25, being 1 July 24 through to 30 June 2025, so it's called F25, financial year 25, we're sort of halfway through it. We're 4 months or so into it. You would, and if they haven't done their 24, which ended 4 months ago, you would say it's beneficial that you would complete that for them. Absolutely. Okay, and even if there were some working papers done, and the previous accountant had done 1/3 of the fee, you would credit that and get the copy of the working papers, and then do the remaining 2/3 of the fee. So it's not 1 cent more or not 1 cent less. So that's your adage, isn't it? That if a client has paid $3,000 for a self-managed super fund report or audit or a compliant return, then you would match that. So anybody coming to you is not 1 cent more, not 1 cent less in year one, and you would match it. So it's a seamless baton change coming across.
Seamless. And if the client has already finished the 2024 tax return, then I think we should just pick it up. There's no sort of right nor wrong time. If you want to engage an accountant, you just engage them immediately on that day, and then you just pick it up and move forward. And yes, we do. We match the previous accountant's accounting fee for like service.
Okay. All right, and staff-wise, you've got about 15 staff, so it's a good size firm, and you've got 4 SMSF specialists, so it's a centre of excellence, and you've got proprietary limited specialists, you've got individual tax return specialists, and you've got family trust, what's called business services specialists, and so forth. And you sit atop this as a sort of a leader, is that right? Yes. Oh, very good. Okay. All right. Is there anything else you'd like to say about the firm or about the nature of accounting today? Do you find that the tax office, are there any warning signs from the tax office? Are they tightening up? Do we have to pay back COVID debt? Do we have to buy nuclear submarines as a nation? Is the government chasing money? Do you think they're stricter? And I think the other observation for clients too out there would be the level of ability with their pre-fill reports and that they pretty much know, not that anybody would want to hide money in a bank like the Bank of Cyprus or something, down there in Oakley, but pretty much the ATO now has got matching data. They've got all sorts. So the best advice would be probably just fess it up and just get good accounting advice for capital gains. Don't try and underestimate, redo paperwork and things like that. It's just not worth it. It's fair to say it's hard now with the tax office's ability to determine accurate information, that it's just best to fess it up. Yeah?
Yeah. Information sharing these days is phenomenal. And it's...
Between whom, Lisa? Who's information sharing?
You can have state revenue with federal government. The ATO provides, and each and every year, their level of information that they share with us through the ATO portal is more and more sophisticated. We're even finding that internationally they'll be sharing data. So if you've got and sometimes I get this, clients are a little bit reluctant to tell me what they've got offshore. They really need to speak to the accountant and let us know what you've got and move from there, because you'll be in a mess at the end of the day. The world is getting smaller and smaller, and the information that is shared around the world, in fact, not just here in Australia.
And you're there to help them. You don't work for the ATO. You're not employed for the ATO. You're employed by them. So you're not going to lie, cheat and steal, but you will help them legally minimise their tax and help them defend a position. So if they haven't done a tax return, and we've had the occasional person come in and say, "Look, mamma mia, ooh la la, I haven't done a tax return for 11 years. You're not their father or their mother. You're not going to spank them. You're not going to report them. The issue really is you're going to help them do it. Now, some of the data, to be able to get that data 10 years ago is problematic, but you will bring them up to date where they should never, ever fear that knock on the door.
Yeah, exactly, exactly. Yeah.
And you also have the capacity, you have strategic relationships with accountants in Bristol, in the United Kingdom, and various locations, and Cheshire. You have relationships with American accountants and so forth. And you've done work for South Africans, you've done work for people in Hong Kong, you've done work for many different places, and you have those strategic relationships and you understand what the rules are for taxation. And you've got key specialists, if needed, for an American tax return, say, to call upon.
Yeah, we do have. We do have.
Okay. All right. Is there anything else that you'd like to say and share, or you've pretty much covered everything?
I think we've just about covered everything.
All right. Well, thank you very much. You're our first guest on Money Talk, so I thought I'd start with you. You're an equity player in the firm. You're a key part. You've been here how long?
15 plus.
15 years. Skin in the game, so she can't leave. She's stuck here. She's got skin in the game, and she's got equity in the business. So, and you do an absolutely great job. And we're going to run these podcasts, one or two every week. But your turn. You're done. So, thank you very much. All right. Cheers. Bye.